at the website. We've been live since morning. We took a short lunch break, and I'm hoping everybody had a quick siesta, had their teas, coffees, and everybody's back. And ladies and gentlemen, usually if it was a live event and we were in a hotel, I would have called this a graveyard shift. But I will not call this the graveyard shift because I was very, very fortunate enough to hear these speakers, our next list of speakers, have their conversation. And trust me, this is going to be a lot of fun. It's really going to be a lot of fun. So get your tea, coffee, be seated, and we shall just get moving. This topic of discussion is going to be on digital lending post-COVID, changes in credit scoring models and risk management. This session is powered by Amazon Pay. Our moderator for this one is going to be Mr. Amol Shivaji Dethe, editor ETBFSI and ETCFO by the Economic Times. Good evening, sir. I hope you're doing well today.
Yes, I'm doing good.
Great. Our speakers, Mr. Mayank Jain, Head Lending, Amazon Pay. Good evening, Mr. Mayank. We also have with us Mr. Anshul Swami, EVP and Head RBL Bank. Greetings.
Hi.
We have with us Ms. Lizzie Chapman, co-founder ZestMoney. Joining them are Mr. Saurabh Sinha, Vice President and Head FinTech and eCommerce, TransUnion CIBIL. Mr. Saurabh, I definitely have to add, you do not look like your 3D version now. You look perfectly fine with the background.
Thank you. Thank you.
All right. So with that, it's over to you, Mr. Amol.
Okay, thank you. Thank you, Muskan, and good evening, each and every one of you. Ladies and gentlemen, it's going to be a wonderful session, I must say, because I think the whole day has been really power-packed. I have been looking at few sessions, and in fact, the interesting report has been also launched at India FinTech Forum this morning. The report is about banking as a service, BaaS. And I will try my best to, in fact, get the most insights from the remarkable speakers that are there for this session. And let me tell you honestly that the session topic is really, really interesting in today's world because the whole world talking about boosting the credit. If you talk about India specifically, from migrant laborers to corporates, everybody is looking for a credit. And that is why the credit topic is very interesting. So I have, as Muskan, introduced all the speakers. Maybe I will ask all the speakers maybe to share 1 or 2 minutes quickly on an overview. So Lizzie, I will come to you first. And if you could give me an overview on the topic, which is digital lending post-COVID, changes in credit scoring models and risk management. How do you see the credit environment right now? If you could give your overview in 2 minutes.
Sure. So it's one of those bittersweet times for anybody in lending. We have probably the most amount of demand and consumer need that we've ever seen, certainly in the lifetime of most digital lenders in this market. But at the same time, this is a period of extreme uncertainty, and nobody really knows how the next 12 months will look economically. And so I think for all of us, we're sort of doing a delicate balance of helping our customers, serving our merchant partners in the buy now, pay later space, but basically focusing on new ways to assess risk and new ways to assess affordability in what is now the new normal. And I hope we have a wholesome debate today on how alternative we need to get, or whether we can still depend on our bureau friends.
Sure, Lizzie. That was so quick and very important. Anshul, I will come to you, and if you could share your overview on the credit market today.
So I think the credit demand, as we see, has started coming back while obviously the festival season helped. In my mind, this will continue to keep on improving. However, like Lizzie was saying, it's not the same across all segments. So now is the time in the post-COVID world to look at each and every sector and subsector very, very closely. Right. There are sectors which are doing really well, and I think lending will pick up faster there. Some other sectors will take some more time. But in my mind, as normalcy gets restored, as our friends in the bureau get updates with respect to the track records and customers have started paying over the last 3 months post-moratorium, I think credit demand will come back. There will be one definite change. The models at most of the places will have to be tweaked to some level because in some sense for 6 months, if you do not get customer payment data, it will disturb the efficiency of your model. So in that sense, you will look for more alternate data points, you look for some more recency, and I think all that will come into play and will be a more critical part when it comes to creating lending models, especially lending to new to bank customers or to get more underserved people into the lending space.
Okay, thanks, Anshul. So, Mayank, Anshul also said that the credit demand is picking up. What is your sense? How do you see the market post-COVID?
Absolutely. Thanks, Amol. And as Lizzie and Anshul mentioned, we already actually seeing since June. I think it's maybe a inflection point that we are going through. A lot of habits that we were all hoping will get, customers will start adopting, are getting adopted much faster. So since June onwards, we are actually seeing a very high demand for credit. And that's driven by 2 or 3 factors, right? First of all, just the shift from offline to online. So that plays a little bit of role, and I hope things will normalize, and they are normalizing already on the festive, post the festive sales. But also the buy has grown. So people are also buying other new types of products which requires affordability, dishwashers, treadmills, vacuum cleaners. We see a lot of that demand, right? Which these categories are waiting for this to happen. Now they have grown 20 times, right, in 3 months. So the customer demand, customer habits have shifted towards these. And as Lizzie was also mentioning, this is the time where the lenders need to step up, and we as a community need to help out the customers to fulfill these. Really, these are not aspirational products. These are the need of the day now, right? And to help them afford these products and these essentials is a very, very important need. And we have seen, like, this festive season was probably 2x the last festive season in terms of just the credit demand. So we are like double where we were, and we see this sustaining and going through as we enter 2021.
Right, Mayank. Thanks for in fact mentioning the festive point as well. Saurabh, I will come to you and your perspective on the same topic. But if you could also add into it about the scoring part, because I'm sure most of the lenders must be asking you about the customer scoring details. So are they asking you for more, ratings and scores of the customers? How's it?
Sure, Amol. I think before I answer that question, I'd like to just kind of reiterate a couple of important points and themes that everyone alluded to, which is around the growth, right? Credit markets have grown rapidly for the last 10 years. In fact, both the overall credit market as well as the fintech lending markets saw their peaks in Feb this year, right? So it was a great time actually to keep growing. And unfortunately, you have a macroeconomic event which I think beyond just business toll has taken toll on human lives, right? So that's shaken a lot of lender confidence, because as you can imagine, RBI and government's moves to ease what people were going through have had some challenges, when it comes to analyzing data. And that's only because, the days past due repayment string that we speak about, which we use to analyze, they stopped rolling forward or rolling back, right? So they were frozen for any customer who as of Feb was a normal customer, right? Now, we often speak about alternative data as a way to solve for that problem, which is possible as a single solution, but I think there's a lower hanging fruit in there, right? The lower hanging fruit is looking at credit information, which is very powerful in newer ways, right? Gone are the times when you just say, hey, you know what, let me look at 1 or 2 elements. I'll look at recent delinquencies, I'll look at the CIBIL score, and I'm done, right? I think the sophisticated lenders that we have today, fintech lenders being, of course, foremost in certain private banks as well. Now is the time when you have to go beyond that. You have to look at elements like what is the ratio or the quantum of recent missed payments? Have they increased their outstanding recently? Have they changed their borrowings from secured to unsecured? So once you start getting very granular in terms of the number of data points that you're able to assess, how far back in time you're able to go, you'll be able to understand evolving behaviors. And remember what Anshul mentioned, it's important to recalibrate your models. But at the same time, I still feel that traditional credit information is still a very powerful informer of where that customer is. That's the start point, right? For the last 6 months, of course, we haven't gotten data, but if you still look at credit information in newer ways, you'll be able to solve for many problems, and then you overlay alternative data to be able to comprehensively solve the problem of credit scoring for the times that we live in. So that's my recommended way forward, I feel that it's a combination of newer data sources as well as leveraging existing data sources better.
Okay, I think thanks for adding that note on the data, Saurabh, in a more meaningful manner. I have some specific questions, and I will start with Lizzie. Uh, Lizzie, if I look at the background of the banking sector, you go to any bank, and the first thing they will say is "come later." By any chance, if you ask for a credit, then they are sure going to say "come later." But here, you are saying "pay later." Take the credit right now. You buy whatever you want to buy, but pay later. Tell me how sustainable this model is.
So I think this is important to differentiate between branding and product. There's been an explosion in the word buy now, pay later in the last few weeks and months. And I think a little bit of that is to do with some very overvalued companies in the world that are in that category. So I think everybody's got the buzzword. I sometimes say, and it sounds glib, but India is actually already the biggest buy now, pay later market in the world, because we have companies like Bajaj Finserv, who've done a phenomenal job of creating a completely new type of credit for this market. So at Zest, we believe that India will be a very unique credit market from a consumer standpoint. We won't copy the West. We won't have exactly the same products, whether that's credit cards, personal loans, home loans. We will innovate on top of that. And Bajaj is a brilliant example. They brought EMI to the mass market. And frankly, EMI and pay later are really the same thing. It's just a function of terminology. And then what's happened in the last 3 or 4 years is a bunch of digital companies have entered that space and helped grow the market, alongside fantastic partners like Amazon, who've been instrumental in basically opening up the market for EMI or pay later products to really go to the masses. And there's nothing sort of sinister or weird about this. Really, it's just about making life more affordable. Mayank talked about it brilliantly. There are so many products in this country that are still unaffordable to the majority of people. Do you realize that less than 3% of households have air conditioner? Now try getting through a Delhi summer without an AC these days. It's not a very nice experience. So why can we not work together to create affordability solutions so that everybody can have, what is now an essential product? Similarly, we saw things like laptops, in the last few months. Work from home and study from home is not, a luxury. It's a reality for pretty much every household. So having availability of affordable credit to afford a laptop within a family is absolutely the need of the hour. So there's no mystery to these products. They're not some kind of new thing that's landed from space. It's simply a way of making life more affordable without a customer needing to have a very heavy personal loan. Now, just final point on this, which is it's not even India specific. There is a global trend happening, especially young people and especially digital native people are saying, I prefer these types of credit products compared to personal loans and credit cards, because with this type of product, I know exactly what the final cost will be. So actually, these products are slightly more consumer friendly because the transparency element is there. So that's a little bit of the background.
Amol, if I can just quickly add to what Lizzie said, it also is such a beautiful product design that it kind of bridges the difference between a payment, the way you would do it traditionally, and actually consuming credit product, right? Because of the transparency, because the availability on tap, it's always available at the point of sale, which is also driven by mass adoption these days, because like Lizzie mentioned, right, there is a change around how Indian consumers consume credit. So we've seen that cultural change versus, let's say, a decade or so back. So I think it's all well-timed innovation for the market, and consumers today are seeing it less as a credit product, more as a way of paying conveniently, and then in one shot after a fortnight, maybe clearing all their outstandings in just a single transaction. So I think it's solving for customer convenience rather than affordability at all times.
Okay, thanks, Saurabh. Yes, I do understand the data and analytics have allowed fintechs and banks to offer the customer convenience to the, lot of customers. But, Anshul, you mentioned about certain sectors, MSME, SMEs. But, at large level, most of the banks are still risk averse. They are not very, very bullish on credit. Obviously, credit is a business model for banks and financial institutions, but they're still not very, very open to it. in this particular, with this regard, what makes you actually confident to lend to a small borrowers and partner with a lot of fintechs and the new upcoming emerging lenders?
So I'll split this into two parts. About one part, which is lending for a specific end use for a consumer, like a durable or any other product, is something which has now been tried and tested. The models have worked over time. It's a smaller ticket size. It's a smaller tenor, and I think most of the financial institutions are very comfortable doing that. The second part of lending to small borrowers, I think that is the space where more work needs to be done. And honestly speaking, sometimes we call it the holy grail of lending to small and medium, actually the micro of the MSME sectors. I think that's one area still where a lot of work needs to be done. That's one space where a bank will be very happy to partner with a fintech or any other data provider who can help us understand the customer better, because a lot of these customers don't bank like a regular customer does. I can't look at his bank statement and lend to him. And that's where I think two parts come into play. One part is, if tomorrow the bureau also has access to insurance data, has access to mobile phone payment data, has access to utility bills, that gives one side of the story and helps us ensure that we can lend better. And the other part is in the ecosystem where most of these small, let's take small kirana shops, which is everybody's favorite area. If I'm able to get data from, say, who's the supplier to a small kirana store, a distributor, that kind of transaction data is something which can really help a bank lend. And I think it's moving in that direction to some sense. There are a number of models which have been tested, but it's not reached the kind of scale which consumer durable lending has reached.
Right, right. So yes, scale is a very important part, Anshul, and I would like to talk about it, and I will come to Saurabh also on specifically alternate scoring. Before that, Mayank, Amazon has been partnering with a lot of lenders, and so you tell me something, before 1 year when obviously BNPL is there, but in last 1 year it has become really successful. Okay, many people are buying under BNPL. So how has been, the demand on your website specifically before BNPL and now after BNPL? And what kind of partnerships do you have with these fintech lenders or even the banks for that matter?
In a way, I can say I'm partnering with all the panel members here, right? RBL is a partner, ZestMoney is a partner, Saurabh is a partner.
Oh, wow.
We are working with all of them to make, our mission is very, very simple. We are trying to make shopping affordable and bring the convenience and, the convenience of credit to not only the credit borrowers, the retail borrowers, but also our merchants on Amazon Pay. And it was very interesting to see when Lizzie mentioned it as an affordability lever, and Saurabh said it's not affordability, it's a convenience of payment. And this is a debate at the heart of it. And the beauty of what now we call buy now, pay later, right? There are, as Lizzie was saying, what is buy now, pay later? It's like you consume now and you pay later. You pay after 12 months in a number of times, then it's called EMI. You pay in one shot next week. That's what a lot of customers have started to believe, that that's pay later. Ultimately, both of these are pay later. This is a continuum. Ideally, what a bank like, let's say Anshul, would like to do is give small credit lines to not tested customers, right? It's a tragedy that less than 5% customers have actually access to credit, right? Or unsecured credit, maybe secured credit more, right? And the reason for that are multiple, right? It's not just the data and scoring, it's also the economics. They don't work. You give somebody a 100 rupee loan, how do you collect it back? The cost of setting it up, cost of collecting is very high. What we saw at the same time, especially in COVID, this became very, very, very obvious. We have been running debit card EMI programs with all the partner banks, multiple partner banks. We have more than 20 banks that are partners. They allow us to give EMIs to customers for buying something which is, let's say, greater than 5,000 rupees. Some banks will say greater than 10,000 rupees. Now, when COVID happened and only essential goods were allowed to be sold, that's where we actually pivoted to pay later in a big way. And we saw that, if a bank can trust you for a 20 lakh rupee car, a crore rupee house, then why can't they trust you for a 2,000 rupee grocery purchase? And that's what is at this, at the heart of this, which brings the convenience and affordability together. During this whole time of COVID, we have seen engagement like never before. We have seen our lenders ask us to enable more and more customers for pay later. We have more than 4x customers that are now eligible for pay later. We have seen the demand go through, like, if on EMI program you had, let's say, 2 transactions in 6 months, On pay later, you have 20 transactions in a month.
Oh,
so for the small ticket, for the small ticket. So on average, these things look the same, right? So what it does, it makes the credit lines that the banks have offered or the lenders have offered more consumable for their everyday needs. And because the customers are more engaged, they come back to take the credit line and use the credit line more often.
Right.
That also translates into a better repayment behavior because they want to keep using it and they remember. Most of the customers who don't repay on time actually are just forgotten about that bill. Because they are now engaged throughout the month, they can use it multiple times.
Right.
They repay also better. And that's where our lenders have seen that our bounce rates are actually lower than what they were in pre-COVID. It sounds very counterintuitive. And that's why we have seen our lending partners come and say, please increase the base of customers that we can offer this low ticket line to, so that we can expand even the affordable lines later on. So that has been in a nutshell the story. And we are very bullish on this program for new to credit.
Okay. Right, Mayank. In fact, very, very important points and very, very informative. Saurabh, whenever I'm talking to fintechs or new age data companies, the first thing they say is we collect a lot of data. And earlier, when you used to apply for a bank, they used to ask for your home agreement, your 6 months salary slips, and the IT returns, and this and that. I know that people like you have created a different model for alternate data scoring and everything. And in fact, one fintech told me that even we look at the customer shopping bag as well, where he goes for a shopping on the weekends and what he eats and which restaurants does he go to. So my point to you, Saurabh, is how safely and securely do you collect data, and how accurate is your alternate data scoring model?
Sure. Amol, slightly, a different answer, because one, we haven't really launched any solutions which have alternative data going into our scoring. So we still do credit scoring basis the consumers' repayment behaviors and past borrowings that is reported by our member banks, right? So that's how we collect the data. The banks have the requisite, I'd say approvals and, consent from the individual consumers, and we end up being the collator of all of that information. So, that's how we today operate. However, we see ourselves less as a credit information company. We see ourselves as an information services company. Credit information is just incidental. What I really mean by that is, look, we're here to solve problems for financial inclusion, for end consumers, for SMBs in the country. And we want to enable banks and different kinds of lenders into the ecosystem to be able to give out credit with a lot of confidence, right? So that's the central role that we play. Now, it doesn't need to necessarily come from traditional credit information. We definitely feel that in the future, we will have a role to play when it comes to aggregating different kinds of data sources to be able to solve the same problem more confidently, right? Obviously, the government and the regulator will also, enable all of that in due course of time. But alternative data, just at TransUnion India level, is a core area of focus, right? So whether it's partnerships for data inflow or it's acquisition of data at rest, right? These are all initiatives that we've invested a lot on. We've in fact hired talent as well. These are people who founded data fintechs in the past themselves. So we've got top end talent, which is getting all of these partnerships together. And again, the end intent is to solve for questions around fraud, around affordability, around identity, and then credit risk, right? But there are many questions that a lender asks of an applicant or a borrower along the onboarding journey. And we see ourselves playing a role across all of those questions with or outside of credit information is, something that we are fairly open with. But again, all of this is also a function of time. Remember, we keep hearing, hey, I have so much of cool information on consumers. There are questions around what kind of consent you've taken from the customers, right? Privacy laws in the country are evolving, which is why we kind of feel that we should err on the line of being traditional, right? Than actually be too adventurous and get information for which, let's say, consent is a little gray, right? So we pride ourselves in getting information which is very, very consent-led. And we hope that with the AA ecosystem going live, all of this will be, furthermore robust in a framework, in a programmatic manner, right? So, I'll say that, just to kind of wrap up my answer, I'll also say that we do not get swayed by this whole narrative that there is so much of information, right? We do underwriting just basis alternative information and it is performing so much better. yes, that may be so for certain segments, because you understand your business better. You can process alternative information to solve specific problems to you. However, we're a bureau which is solving problems for the entire country, right? 450 million individuals. So it's extremely important that any data source that we look at scoring basis on is validated at scale, right? And that hasn't been done for too many data sources, alternative data sources at scale, right? So I think it's a matter of time, right? We will probably keep switching in one data source after the other, but it'll be an incremental process rather than overnight just say, you know what, there is this great alternative data that I just found and I'm going to do underwriting fully on it, right? So that's the way forward that I feel will be there for the industry.
Okay. Thanks, Saurabh. Let me bring Lizzie here. Lizzie, you've been very obviously very bullish on the credit cycle, and I want you to tell me more about the alternate data scoring. And while underwriting products, I'm sure you must be looking at a lot of data. So, while underwriting product, what makes you actually confident about the risk while you disburse loans to the borrowers? What makes you actually confident? I mean, what is the data that you have collected? What is the scoring that you're given to XYZ data, like the banks and the financial institutions, AAA rating, AA rating, something like that? What makes you actually confident while disbursing loans to XYZ borrowers?
Sure, and I think this sort of alternative data has, almost taken on mythical status. Actually, most alternative data is really very traditional. It just might come from an alternative source. And what we say at Zest is it's not how much data you have, but what do you do with it, right? And let me give you a couple of examples because that will help you understand how useful data can be. Here's one of the very simplest examples. We create what's called a credit limit on the back end, and that enables us to comfortably disperse a loan up to an amount that we know the customer can afford. Now, this is not rocket science. Credit cards have always done the same thing. I'm sure you know the credit limit on your credit card, and sometimes out of the blue, they'll increase it, and that's a very exciting letter that you get. But that is a static decision that's been made. The beautiful thing about a digital lending model is that we can dynamically change that credit limit every day, minute by minute. So we can take in additional data points, such as a pandemic outbreak, such as lockdown scenarios in different PIN codes, for example, and we can alter that credit limit minute by minute to make sure that we're never putting a customer in a situation where they would be unable to afford the loans that they're taking. It's very hard using a traditional credit model to create that just-in-time modification. So that's why I say one of the important things is not just the data that you have, because honestly, the data that goes into that affordability assessment is actually quite black and white. It's going to be expenditure and it's going to be income of a household. And there will be some assumptions made and some proxies based on additional data sources that we might have, but it's not rocket science. Any traditional underwriter could do the same analysis. What's clever is that we can use models that are self-learning, that are absolutely responsive and fast, and can therefore update minute by minute. So just to give you a second example and how that works together, what we could do as soon as COVID became a real life matter, and as soon as lockdown started across the country, we created what's called an income shock prediction model, which allowed us to predict which segments of our customer bases were most likely to get a real income shock. So a good example would be, a guy running a retail shop in a busy town. He's probably going to have to shut his shop during lockdown. That's an income shock. We could predict that and therefore reduce his credit limit to make sure that he didn't get over himself. It's much, much harder to do that using just a traditional bureau score, for example, where the decision you're making is yes or no. We had much more real-time updation thanks to the data models that we've built. So that's just to give you very, very simple examples. We don't, just final point on this, we don't believe in taking data from customers unless they understand why we're taking it and they give obviously complete consent. And importantly, that they get a benefit from sharing that data. At the end of the day, the data belongs to the customer and their sharing is a very valuable and trusted matter, and therefore they must see the benefit of that. So just to be explicitly clear, we do not do things like scraping a mobile phone to obtain data. Okay. We don't think that that's the right way to do it.
Okay, thanks for that brief, Lizzie. Anshul, since everybody is using credit score, alternative data very, very aggressively. Uh, can we imagine, or can we in fact understand that even banks like you will absolutely go on automation part going ahead? Because even SBI, also recently said that they will go for a small loans completely automated. So do you think that by using, credit score, alternative data, and, you can manage the risk so well that everything, all these loans will go in automated mode? Is that the future?
I don't think that's the future. I think that's the present, at least for small ticket loans and cards. Uh, in say issuing a card and setting up a card limit, there is no manual intervention which is required. It runs through a black box which gets information from the bureau, and there are internal models created which are able to underwrite and set up a limit for the customer. So, like Lizzie was saying, that some of these items have become standard as far as small ticket products are concerned. Yeah, if you're giving a business loan to an entity, those models still obviously haven't reached the stage where they can become automated. As far as cards, personal loans are concerned, they are automated to a large extent. But the larger part is what Lizzie pointed out. It's not about the first limit setup. It's about how you see the customer behavior and are able to enhance the limit or reduce the limit depending on the customer behavior. On there were points mentioned on how he uses it, where he uses it, how often he uses it, does he pay on time, how many times does he miss the payment. All those variables go into deciding the fact that, say for example, you got approved for a 1 lakh limit. In 6 months or 9 months, will your limit be enhanced or not? So I think that's something which most of the banks are using at this stage. Business lending, yes, I think that needs a lot of more work.
Okay. Mayank, you
I
heard
think,
Lizzie.
Amol, if you think about what's happening on the OCEN front, the UPI moment for business lending is just also around the corner. So, to Anshul's point on business lending, while the underwriting is much more complex, I think a large automation is just around the corner.
Okay, thanks, Saurabh. Mayank, you heard Lizzie and Anshul, they spoke in detail about the data and alternative scaling. You're dealing with millions of customers. What are the changes and what are the learnings? What are the major case studies that you are, taking from these borrowers? Are they actually utilizing the limit of when they get a next limit? For example, if somebody is having XYZ limit and then they get XYZ plus, are they going for more shopping? Are they spending more?
Definitely, credit is removes the friction from consumption, and definitely for a credit starved country like ours, we have seen that and that's the reason why we have seen actually, post COVID was also what has happened is not only the lenders have started focusing online, even our brands and our sellers, they have started leveraging this lever, right? We offer, I think, the country's biggest no cost EMI program after I think Bajaj FinServ, where we see now 3 out of 4 EMI purchases happening on no-cost EMI, and all this is subvented by our brands and our sellers, right? So what we are seeing is the friction that the Indian consumers, we have typically been a saving country, right? We like to save more. That's why we have so many, I think we have highest savings rate, that goes without saying, and people don't want to pay interest, right? They want credit, they want to afford something, they want to wait. We are a country which is a little bit more conservative, but these kind of interventions, this is reducing the friction of using credit. Also, making customers become more comfortable using it. Also, the points that Lizzie and Anshul mentioned, I would say, while data and alternate data sources or traditional data sources, these are one part of the puzzle. That how do you expand the access to credit? The other part of the puzzle is the customer experience. The ability to marry the demand with supply of credit, right? You need it now and you are able to use it, right? You need it for a small ticket size thing or a large ticket size thing, and you are able to do it. That's the role where marketplaces like Amazon, see us being able to collaborate with all these lenders, right? And ecosystem partners to make this magic happen, right? When you want it, you get it, one click, and the product gets delivered to you. So there's whole, 3 aspects coming together where alternate data sources expand the access to credit, experiences like checkout, signing up in checkout and using it there, expand the convenience of the customers. And all this put together makes the economics also viable for the lenders.
Okay, thanks, Mayank. And in fact, watch is ticking. The time is actually over. We don't know actually how I invested half an hour with you, but good learning for me, in fact, and I'm sure for the participants as well. Thank you, Lizzie. Thank you, Mayank. Thank you, Saurabh, and thank you, Anshul, for sharing remarkable insights. And I'm so sure that with fintechs and with the new innovation, the credit market will blossom, which is the need of the hour in India. I think once the credit blossoms, then automatically economy will get a big boost. So thank you, everyone for sharing your insights at India FinTech Forum. Thank you so much.
Thank you.
Thank you, Amol.
Thanking Mr. Amol and the rest of the speakers. Now, again, if we were on a stage, I would have requested for a group photograph, but that's not possible. Can I see everybody giving us a wide smile, because a lot of audience members watching all of you. Great. Thank you. Thank you so much for being here this evening. We'd like to once again thank Amazon Pay for supporting this session.